we're already above 19.5 million units. And so if institutional investors are looking at this new asset class more seriously, and Bitcoin is really the first of its kind in a new asset class and will be, we believe, the biggest opportunity of them all, they must consider an allocation. And so supply demand, they're doing the arithmetic, and we see
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discusses Bitcoin and crypto. Bitcoin is increasingly acknowledged as a significant asset class, with Cathie Wood, CEO of Ark Invest, emphasizing its potential to represent 2 to 5% of institutional portfolios. In contrast to traditional investments, Bitcoin demonstrates low correlations with conventional markets, which increases its attractiveness for portfolio diversification. Wood highlights its dual function as a safeguard against inflation and a wealth-creating asset, especially significant in emerging markets. The rising institutional interest in Bitcoin can be attributed to its distinctive features: decentralized governance, limited supply, and expanding adoption. In the current macroeconomic climate, where inflation and currency devaluation remain concerns, Bitcoin's scarcity and independence from central bank policies make it a compelling insurance policy. Emerging markets, typically more susceptible to inflation and capital controls, are positioned to gain substantially from Bitcoin's decentralized and borderless characteristics. The increasing institutional adoption is significantly supported by enhanced regulatory clarity and the introduction of Bitcoin-centric financial instruments such as ETFs, which facilitate easier access for conventional investors. The potential for Bitcoin to secure even a small portion of the approximately $200 trillion overseen by global institutions suggests a significant opportunity for exponential growth in its market capitalization. Wood's forecasts are consistent with the overarching patterns of rising corporate treasury investments and heightened sovereign interest in cryptocurrencies. Bitcoin is transitioning from its original function as a speculative investment to a vital element within diversified investment portfolios. The dual function as a hedge and a growth asset, along with the rising institutional confidence, establishes it as a fundamental component of upcoming financial frameworks. And lots of things Cathie Wood discusses, so please watch the video to end and like, share this video, and subscribe our channel Everyday Finance. Thanks.
Bitcoin today, now that we're going to get more regulatory green lights, we're seeing institutional investors focus on this new asset class. And as they're learning about it, they're saying, wait a minute, this new asset class, or this component of a new asset class, Bitcoin, is going to reach 21 million units out there, 21 million Bitcoin out there at its peak, and no more from there on. Where are we now? We're already above 19.5 million units. And so if institutional investors are looking at this new asset class more seriously, and Bitcoin is really the first of its kind in a new asset class and will be, we believe, the biggest opportunity of them all, they must consider an allocation. And so supply demand, they're doing the arithmetic, and we see 1 million to 1.5 million by 2030. That the probability of that has increased because of institution. Well, I think it's a very big idea, and it's not just speculative. It's a global monetary system that is rules-based, it is private, it is digital, it is decentralized, and it is backed by the largest computer in the world, or the largest computing system. It's the most secure network in the world. So that's very important. Gold would be in the same category. Gold is a store of value, and it is fairly scarce. What's interesting, in the last year, with the last halving this April, the increase in Bitcoin the number of Bitcoin per year, the percentage increase, dropped to roughly 0.9% per year. That is below the 1% long-term growth in the supply of gold. So it is becoming even more scarce than gold. And the difference between gold and Bitcoin is when the gold price goes up, as it has, production goes up. The rate of increase in the supply goes up. That cannot happen with Bitcoin. It is mathematically metered to go up now 0.9% per year for the next 4 years, and then the supply growth will be cut in half again. So we think you can use gold as a guide in terms of what this asset class is right now, at least. It's very definitely a store of value, a digital store of value, and it's a very big idea from our point of view. You can also go to our big ideas, arkinvest.com, Big Ideas 2023, and see how we get to that $1.5 million by 2030 in our bull case.
The recent introduction and rapid decline of the HOK to a Hoki token have highlighted considerable apprehensions within the cryptocurrency sector, emphasizing the inherent risks tied to meme coins and projects influenced by social media personalities. The asset associated with influencer Welch experienced a significant increase in market capitalization, reaching $500 million shortly after its debut on December 4th. However, it subsequently plummeted by 90%, raising suspicions of a potential rug pull. This situation underscores the unpredictable and speculative characteristics of meme coins, which frequently do not possess intrinsic utility or strong foundational support. Investors have initiated legal action against the developers and associates of the HOKI token, alleging the promotion and sale of unregistered securities. Although Welch, who advocated for the token through social media channels, is not officially listed as a defendant, her participation has attracted considerable attention and examination. Analysis of blockchain data indicates the presence of anomalous activity, as a single wallet secured 18% of the token's total supply at the time of launch and subsequently liquidated its holdings for profits exceeding $1 million, contributing to the token's decline. Given the existing SEC guidelines, tokens such as HOKI could be classified as securities, thereby heightening the potential for legal repercussions for the project's founders. The impending transition of leadership at the SEC to Republican control may have implications for future regulatory approaches regarding these cases. The swift fluctuations in the value of the Hoki token highlight the speculative nature of meme coins, capable of drawing significant capital investments while simultaneously presenting increased vulnerabilities to fraud and market manipulation. It is advisable for investors to exercise caution, particularly regarding tokens that do not demonstrate clear utility or transparent governance structures. Welch's role as a promoter, albeit indirectly, underscores the possible legal and reputational risks that influencers face when endorsing cryptocurrency initiatives. Regulatory bodies are likely to enhance their scrutiny of these promotions, which could add complexity to the environment for comparable tokens. The situation highlights the necessity for enhanced safeguards for investors and more defined regulatory structures. The recent changes in the SEC's leadership may prompt a reassessment of the classification and governance of tokens within the market. The situation surrounding the Hoki token highlights important lessons for both investors and influencers in the market. For the market to reach its full potential, it is essential to establish an equilibrium between promoting innovation and maintaining accountability. This case underscores the critical need for thorough due diligence within the cryptocurrency sector, especially as speculative assets such as meme coins garner significant interest. Let's get back to Cathie Wood interview.
In a way, but I think during COVID, it was turbocharged. A lot of, especially younger people, who would not meet the accreditation standards. They were learning about new companies, investing themselves, trying to figure out what these new technologies were all about, and happened upon private companies to which they had no or little access. And I think because of that, and because I know we started our venture fund for that reason, they came to us and said, how is it, we don't have enough, we don't make enough money, $250,000 per year, I think it is, and we don't have $1 million in net worth to become accredited and have access to these incredible technologies early in their lifetimes. Can you help us solve that problem? And so, yes, that's why we started our venture fund. It has no carry, and people can have access to SpaceX and OpenAI, Anthropic, XAI, X for as little as $500. Well, if you look at the performance of our funds since the election, they've far outpaced the market, outpaced the Mag 7 and so forth. So I think what the market is beginning to say is this administration is going to support innovative strategies, anything that will accelerate the growth, increase the productivity of our economy. Deregulation is going to be, we think, a very large part of that. Tax incentives, tax rate cuts as well. You mentioned perhaps the cutback in government spending programs. In our mind, government spending, longer term, is taxation in one form or the other. It's got to be paid for with increased taxes now, increased taxes later, or basically through inflation, inflating away the debt. So we think that's going to be very positive, this drive towards increasing the efficiency of the government, which will then limit the kinds of tax increases we've seen over the last few years, and perhaps even continue to roll back taxes, leaving more for the private sector at the expense of sort of inefficiencies in the government sector.
Quantum Biopharma, a publicly traded pharmaceutical entity, has made a significant move into the cryptocurrency sector by purchasing $1 million in Bitcoin and various other digital assets. The announcement made on December 20th indicates an increasing trend among non-crypto enterprises to diversify their financial reserves as a strategy to mitigate inflation risks and navigate market volatility. The recent announcement resulted in a nearly 10% decline in the company's Nasdaq shares, indicating a divergence in market sentiment regarding corporate adoption of cryptocurrency. Quantum Biopharma is listed on the Nasdaq, Canadian Securities Exchange, and Frankfurt Stock Exchange, focusing on biotechnology solutions targeting neurodegenerative diseases, metabolic syndromes, and alcohol misuse disorders. The company's entry into the cryptocurrency market is consistent with its strategic objective to facilitate financing and transactions involving digital assets, though particulars regarding the tokens obtained remain undisclosed. This strategic shift occurs in the context of escalating inflationary pressures in the U.S., as evidenced by the Consumer Price Index, CPI, reflecting a year-over-year increase of 2.7% in November 2024, marking the highest monthly rise in 7 months. Organizations are progressively recognizing cryptocurrencies, especially Bitcoin, as a potential safeguard against inflation, attributed to their decentralized characteristics and finite availability. Quantum Biopharma's decision aligns with trends observed in the market, similar to Jivet Technologies, which has recently sanctioned an investment plan of up to $1 million in Bitcoin, highlighting its perceived potential as a hedge against inflation. This trend highlights a wider institutional recognition of cryptocurrencies as a means for diversification and a strategic financial asset. The ramifications of Quantum Biopharma's decision reach far beyond its financial statements. This indicates an increasing recognition among conventional sectors regarding the value and possibilities presented by digital assets. The 10% decline in its Nasdaq stock price following the announcement indicates that investors are exercising caution regarding the volatility and regulatory uncertainties associated with cryptocurrencies. The contrast between strategic foresight and market skepticism highlights the challenges and opportunities that companies encounter when incorporating cryptocurrencies into their operations. With the growing adoption of digital assets by firms such as Quantum Biopharma and Jivit Technologies, we may observe a rise in institutional involvement within the crypto market. The effectiveness of these strategies hinges on the stabilization of cryptocurrency markets, the development of regulatory frameworks, and the capacity of these firms to strategically utilize their crypto assets to enhance shareholder value. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.